I do want to hear your thoughts or get some more details on this 3%, but I'd love to come to this news, at least, that has not been yet shared by the SEC, but has been reported by a number of news organizations that the SEC will not move to ban payment for order flow. Do you have anything to share on that in terms of your understanding as to whether the SEC has reached that conclusion and or what it might mean for your business?
Great to be here. No, we don't. Obviously, nothing definitive has been released. We're on the lookout with everyone, but I do think that it's great news for our customers. Payment for order flow and the business model that we've introduced has really helped establish commission-free trading as the standard, and customers have never had it better for their investments. But what I'm here to talk about, as you mentioned at the beginning of the segment, is we're rolling out a 3% interest rate on cash for Robinhood Gold customers. As you guys know, that's a very high rate, and especially in times like these where inflation is high and interest rates are increasing as well. Banks are paying almost nothing on customer cash. So the 3% is 23 times what you would get from a typical bank, and we're excited to offer that to Robinhood Gold members.
Yeah, and Vlad, you've learned well in a short time to how to pivot to what you want to talk about. But let's come back to what I wanted to talk about briefly, and then we'll talk more about this 3%. Just to make sure, you don't have any understanding in terms of what the SEC may or may not propose, whether there is no ban, but perhaps there's going to be still, a bit more that's asked of you in terms of this that could crimp margins. Just anything you might be able to share would be helpful.
I mean, as we mentioned before, payment for order flow, I think from a business standpoint on equities, was around 9% of our revenue. And you've seen Robinhood continue to diversify and offer more products that offer differentiated value for customers. So not just, the high interest rate on cash that we're rolling out for Gold members today, but things like stock lending that allow customers to earn yield on stocks that they're holding in their accounts. So we're continuing, especially in this environment, to diversify our business, diversify our product offerings to make sure customers can generate income and generate passive income even when they're not trading.
All right, before I hand it over to Morgan and Carl, I will come back and say, all right, how are you getting to this 3%? Give us the mechanics behind it, why you are able to offer a rate that obviously is far in excess of what anybody's going to get in their checking account or savings account.
Yeah, and we're really excited about that. So in particular, what you're seeing now is a lot of the major banks in the U.S., as rates are increasing, as the Fed is increasing the funds rate, they keep the rates they pass off to customers at close to zero. And they're viewing this as an opportunity to increase their margins at a time when customers are feeling the pain at the pump and at the grocery store the most. So what we actually do with this cash sweep product is we sweep it to a network of banks. So not only are customers getting the high interest on their cash with no cap, but they're also getting $1.5 million in FDIC insurance, which is 5 times what you would get from a typical bank. And that's because we actually can sweep it to multiple banks and provide you even more protection. So it's really a fantastic product, and it helps people generate passive income even when they're not investing.
Vlad, the fact that we're having this conversation about a product offering around cash, how does it speak to the activity you're seeing across your platform with your users, your customers, so many of which are retail investors who are millennial, are Gen Z, have not necessarily seen the types of wild moves to the downside we're seeing in the market right now?
Yeah, it's a learning experience for our customers, for everyone. I mean, nobody could have expected the Fed's moves over the past 2 years, let's say, with the rapid lowering of interest rates at the start of the pandemic and then kind of the rapid increase last year. But from the very beginning, Robinhood has been focused on not just providing tools for people to invest and trade, but also we've been excited about this idea of taking interest, which historically has been available, high interest is available to institutions, to high net worth individuals, and passing it down to everyone, making everyone benefit from that. And that's really what Robinhood is about. It's not just investing and trading, but it's really about taking these great tools of economic opportunity and offering them not just to the wealthy, but to everyone.